One healthcare stock is up nearly 200% this year. It didn't discover a blockbuster drug. It didn't run a single late-stage trial. In fact, it only employs 40 people. I'm Alex Carter. Welcome back to Wealth Signal. Quick reminder before we dive in, this video is for education only, not financial advice. Always do your own research. If you've been ignoring healthcare because it feels boring next to AI stocks, this one might change your mind. The way this company actually makes money breaks almost every rule of how biotech usually works. I dug into how this business actually works, checked the cash flow numbers, and looked at exactly why short sellers are starting to get nervous right now. If you're serious about understanding how real money actually gets made in this market, hit subscribe. This is exactly the kind of company we break down every week. Today we're breaking down Ligand Pharmaceuticals, how it flips the entire biotech playbook upside down, what's actually driving nearly 200% growth in a single year, and why there's a short squeeze setup quietly building that most investors haven't even noticed. Ligand Pharmaceuticals, ticker LGND. And no, this isn't some hot new biotech chasing a miracle cure. It's something almost nobody in the market is talking about the right way. Most biotech companies bet the entire business on one drug working. They spend years and billions of dollars, and if the drug fails, that money is just gone. Ligand doesn't play that game at all. Instead of betting everything on one outcome, they collect royalty checks while other companies carry all of the risk. Here's how it actually works. Getting a new drug from the lab to the pharmacy shelf usually takes 8 to 10 years and costs close to $2 billion on average. Most of that money is spent on drugs that never even make it to market. That is the real risk in biotech, not the science, the money. Ligand skips almost all of that risk. They find promising drugs at the very early stage, develop or acquire them while they're still cheap, and then hand them off to big pharmaceutical companies who take on the cost, the trials, and the risk of failure from that point forward. In exchange, Ligand keeps a royalty on every sale once that drug actually hits the market. They don't need to be right about which single drug wins. They just need the licensing deal to close. Right now, that model has produced more than 100 drugs, some already selling, some still in development, quietly generating income in the background. Let's talk numbers. Ligand is sitting on $780 million in cash. Over the last 12 months alone, the business generated about $120 million in cash flow. It's been cash flow positive in 9 of the last 10 years, 6 years running right now. And Wall Street projects earnings to triple by 2030, then quadruple again by 2032. All of that run by a lean team of just 40 employees. No massive research labs, no army of scientists to pay. Now, here's what concerns me as someone who looks at these numbers carefully. This stock has already run up close to 200% over the past year, and right now it's trading above where most analysts have their price targets set. That kind of move makes some investors nervous about jumping in this late. But here's something worth sitting with. Analysts are famously late to the party. They tend to raise price targets after a stock has already moved, not before. So, if you're only looking at today's consensus target, you might actually be looking at yesterday's number. Imagine you're an investor who bought Ligand a year ago, before any of this got attention. You'd be sitting on close to a 200% gain right now, and the story that got you there, the earnings growth, the cash flow, none of that has actually changed. It's just getting more attention now. There's one more piece of this that makes it interesting right now. About 9% of the available shares are sold short, investors betting the price will fall. That's approaching the level where things start getting uncomfortable for short sellers. As the stock keeps hitting new all-time highs, anyone holding a short position is sitting on a growing loss. At some point, enough of them decide to close those positions by buying the stock back. and that buying pressure alone can push the price even higher, on top of whatever else is driving it. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. This is exactly what investing is supposed to look like. Not chasing hype. Understanding how a business actually makes its money, and recognizing when the rest of the market hasn't fully caught up to that story yet. This is my analysis based on research, not a recommendation to buy or sell. Your situation is different from mine. Always do your own homework before putting any money to work. If this breakdown gave you a new way to look at healthcare stocks, hit that like button. Subscribe with notifications on, because we cover names like this every week. And drop a comment. Tell me if you'd hold Ligand at these levels or wait for a pullback. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next time, we're digging into a completely different corner of the market that most investors are sleeping on. I'm Alex Carter, and I'll see you in the next one.